Hey guys, Casper here with a quick update on it's not silver, it's not gold, it is actually something very boring for most people, and that is the soft commodities. We're talking cocoa, sugar, coffee, all these guys, wheat, and yeah, again, from time to time, there are opportunities to load up big into these commodities. And I'm using, when I get in, I'm using very long-term patterns that are breaking. That's when I'm getting in. I'm not, I am, but most of the time I'm waiting for the big stuff. Or if you can get a really good, if you have a bias to the upside in whatever it is, you can snipe something early with a good stop loss, of course. So yeah, I was just looking at also here the uranium spot price. Again, very exciting, very exciting with that whole bull flag here. You know, getting above that high again here, roughly there, roughly 73, give or take. Then we have broken the bull flag, and then we're getting back above the previous highs over here. So very interesting if we can break here. I hope we can. However, uranium is not soft. Therefore, let's go into the big business here. Speaking of, again, the big long-term entries, remember this, again, was one of my best calls at that point in time. And again, I messed it up a little bit. I missed the bigger move. It is what it is. But again, these are the type of stuff where you have like this is a 20-year break, roughly. Well, 13, my bad. 13-year break. And as I as I say a lot of times, it doesn't matter what this is. If it's an ETF, if it is the QQQ, gold, silver, crypto, it doesn't matter. When you have such a pattern here, you are you should automatically be very interested in such a setup. Again, it doesn't matter if you hate crypto. If this was Bitcoin, right? I say I'm gonna load up the boat here big time if that was the case. If this was gold, I would do the same. If this was yada yada, you know the deal. So that's why when sometimes in softs we get a good breakout and we can have a big move. And yes, I didn't expect that, by the way. Look at the short squeeze here. That is a short squeeze. Nothing more, nothing less. You can see, boom, short squeeze. It has nothing to do with, um, the crops getting, worn out by, not the plague, but you know what I'm saying, any diseases or anything. No, it has nothing to do with that. That is what you're told, but this is basically a massive short squeeze because my view is the futures market is created from the big guys in order to control the price for as long as possible. And why would they control the price? What would be in their interest? Yes, it would be to keep the inflation down for as long as possible. But the more you hold down the price, artificially hold down the price, the bigger the explosion will be once you take the lid off. Because at some point they can't hold it down anymore. And that is what we're gonna see in silver. That's what we're is about to see in what's it called in coffee, and that is what we saw here in cocoa. And yes, I didn't expect that, by the way. That was extremely explosive. And I think I said this is 3 to 5 years, and it took basically 1 year to do that entire move. So completely insane. And that, by the way, is the short squeeze, right? This was somewhat. Yes, it's rapid, but it's somewhat normal. And then all of a sudden, vertical, just completely. Again, there are some people that have their accounts blown up there. Bull flagging here on the cocoa chart. That's nice. Bit of a rally. You can see we went to the triangle high. Remember, triangle highs is very good. Again, just trading that, the breakouts, and don't do the entire measured move. Just go to the triangle high. I mean, that is something that I'm thinking of going to down the road um, to do only that setup basically. Unless, again, only you never only do that, but that will be my bread and butter. I think that is something that I've been trying to to look into because very often, I get this right. We get to the triangle high, and then we do a lot of fizzling before eventually going higher. But if you can snap these man, oh man. Anyway, so cocoa here, ever since we peaked, we haven't really done anything. Again, could it be that we're having like a target up here? Yes. It's still overall strong uptrend, but again, you can also see a lot of stuttering here for the past year or two. So, and potentially we have a bit of a bear flag here, but I'm not quite sold on the bear flag because it looks not too much like a bear flag. Again, if we break, the lower side, there might be something to it. But for now, very neutral. There's nothing really in it for me here. If we had a case where this high was only here and we could start to maybe build something, then yes, definitely. But yeah, cocoa, I think for a long time the gains has been made, at least for now. So that is my view on cocoa. Next one here. Oh, lovely. Again, remember we called it a 50-year breakout. Remember, it doesn't matter what it is. If you have, in this case, coffee, and you break a 50-year, almost sideways, range-bound commodity, in this case, or channel, what what are we? I mean, that's when we get excited. That's when we're getting really, really excited. Look at that internal, by the way. I didn't take that, but these are also the kind where, if this breaks to the upside, it is most likely, you know, the lowest point in a very long time, and you're gonna see that tag and move on. So, are we bullish still long term on coffee? You bet we are. This is one of those. Again, I said 3 to 5 years on what's it called on cocoa. And again, this is still my call, 3 to 5 years on the coffee chart. Again, could we see a cocoa? Maybe. I'm not saying that we are, but I was very surprised by the last time. So short term here, this was the breakage, right? That was the break. Look at that again. Breakout, retest of the 50-year, and then we went on. And we haven't done much since. And this is the daily. And this is a good exercise. You can say that since we are breaking out of a 50-year pattern, what happens on the daily? Completely noise. I wouldn't go lower than the monthly because you have again, 50 years multiplied by 12. That is, 600. So 1 month is only a fraction of the entire setup. So anything below the monthly here, in my view, is again, it doesn't really matter. Um, and unless we start to close back below here, back below like 300, that's when we might be wrong on the timing. I think we're going to go higher, but the timing of it, we're most likely wrong here. But for now, monthly back test of what? The previous all-time high from 50 years ago. So yes, again, it's totally within the norms as we speak. There's nothing really to be dangerous about. And if you have the long signal from 300, don't don't look into the daily action, even the weekly action. It doesn't really matter at all until we see some significant breakage of the 50-year structure. Until then, close the books, go outside against some, it doesn't matter. Um, and yeah, again, long term, fantastic. 50-year breakout. Let it do all the retesting, all the confirmation, all that good jazz. Fine. And then we can move further higher. Again, could you be a buyer here? Yeah, I think so. You can buy the retest of the all-time high, and still the stop will be somewhere below 300. But again, ideally, you would have bought the 300 there because you're basically risk-free. Again, entry is so important. It's so, so important. Good. Sugar. All, sugar, sugar. Again, I have a lot of people are asking me why I haven't, sometimes I don't have, the important stuff on. Again, I don't have everything on because you know, I wouldn't say confuses, but sometimes you're getting all sort of different stuff going on. And yes, this one here was a major buy back then. Again, remember you had a 40-year breakout. So you went from 3 to like 30 or so. But the big one in my book is yet to come, the big one, and that is that major resistance. Look at that again. 50 years. Will that break? Absolutely. I can't see a scenario where that won't happen. And of course, remember when I say it with such certainty, and that is my completely that is my view. And could I be wrong? Yeah. But again, this to me is one of those where you see them all the time on the lower time frames and the insanely long, and with a high probability it goes to the upside. And yes, we're gonna see sugar go way higher. We are gonna see sugar go way higher. So that is the big breakage up here at roughly 26. That's the big one. However, again, talking about, internal sniping, again, we have the bias. We're gonna break out. That is our, you know, that's our confidence. We're gonna break higher. For now, we are in this little bull flag here. Yes, we are seeing again some potential topping pattern, but again, we're also within a range. So typically they don't mean much. They can, but typically they don't have that much of a of value to it. So what are we looking for? When this flag here breaks, let's say, then you can go long. Then we can have to stop there. We're trying to snipe it before we get the break. So we're basically early and we're gaining 30% on top of what we will otherwise get as well to the upside there. So yes, right now, clearly 2 years downtrend, bull flagging. That is a downtrend. But when that breaks, at some point in time, we're going to be very happy. Could it be that we're going to go all the way down to here as well? Yes. Again, everything is a possibility. So the plan is if this flag breaks to the upside, we go long, stop below the recent low. That is the plan if that happens. If we are going to come all the way down to here, are we going to buy here? Yes, you completely can be sure about that. We do. We're still within the channel here. We have the bias to the upside. You buy here, we can have to stop below, and then that is our expectation. Yeah. So it's all about if that happens, this is our strategy. If this happens, then we do that, and so on. So we play what we see and we take what we get basically. So just to keep it short, sugar. Again, if you ask me 10 years from now, I think we are gonna be where are we now? Again, 10 years from now, that's there. Again, we are gonna be at least 500% up. Again, big calls, but again, we have 10 years. And this overall here is a beautiful long-term bullish pattern. And yeah, no matter how we get there, I think we're gonna be way higher on sugar. So that is the wait now. We wait for this bull flag to basically do its thing and hopefully break before we get down to here. Again, it's more bullish not to go there because then the bulls are stepping in before. But either way, if we get to there, back testing the triangle and the uptrend, beautiful double mega support. Yes, that is a buy as well. Not right now, but it will come. And remember, we are looking long-term time frame. So if we are going to go here, again, it would be somewhere in 2026. So patience when it comes, that's the big moment. That is the big moment. Soybeans, first off, look at look at the uptrend here. This goes back 25 years. So that is also insanely long. Insanely long here. That's the uptrend. And then we have a ceiling. And typically, again, I want to draw this pattern here because these you also see often. Flat ceiling, upsloping support. So when you get these, right, the most likely scenario is that continuation. Again, you have momentum, you consolidate, you go higher. Again, that's the most likely probability. And that's the same here, even though the momentum is not that strong here, but that's a different story. We're still seeing higher highs, excuse me, higher lows from this one here. So that is the long-term view. Now we go down to the 4 year, which is still it's not short term. It's still, again, 4 years. I would love to be 4 years younger, right? So what are we looking at here? We're basically looking at the tag. Then you break the structure here. Then again, here you can see some bearish structures there. So we are clearly in a bear market for soybeans. Not gonna lie, we are in a 4 year bear market on soybeans. Again, basically we haven't seen anything bullish bear flag there, a little bit of a channel breakage there, and also you can see the test over here again. So technically, huge bear market for soybeans. So when we again, we're also bear flagging now as well. So the outlook is not that good. But if this one negates, this is a 1 year bear flag. If that negates and break the yellow and the blue, basically taking this channel and then the upper resistance here. So you can see that's actually two things going on there, the blue and the yellow, which is important. If we can start to trade north of, let's call it roughly 1,100, then all of a sudden it gets really interesting because that's when you have negated a bear flag, you have broken the both big downtrends, and we should again go to here. And what happens when we get to there? We sell everything we sell because the most likely scenario is pullback. Again, now we have three. You know the deal. We break on the fourth, right? So that is the thing we're looking at on soybeans. So right now, summary, huge bear market for the past 4 years. And we are not excited or anything bullish until we start to negate the bear flag and the two downtrends and get above roughly 1,100, $1,100 for soybeans. Then it looks different. So yeah. But again, big opportunity here. Could be half a year out, whatever. Same thing here with corn. Again, similar setup, the exact same setup basically. And then you have a ceiling here, which is not perfectly defined as the soybean, but the low one is, more or less. And what are we waiting for? We are just waiting for this kind of channel here to break. Again, this is a 3 year bear market. 3 year bear market, right? Break of structure here, bag test, and then you can see we coming down here. And what is happening now could be a little bull flag before we break. So we're basically waiting for that beautiful thing to break. And that will happen, somewhere, if we want to be really nitpicky here, anything north of like 500 is a really good thing for corn. And then we're going to see almost a double to like 800 or so. But for now, downtrend, nothing more, nothing less. And that's really what we're looking at for corn. Again, opportunities, we just wait. We have a plan and we wait. We don't do anything out of the ordinary here, keeping it somewhat simple. Same thing here again applies to the wheat. Very similar to the corn, of course. But again, you can see the text again, just dead on 1,366, give or take. That is the highs. And the expectations that we have is when this wedge, because we have the same trend line here pushing it up, right? We have a flat ceiling, upsloping trend line, bullish long-term bias. This is 30 years, so bullish long-term. And for now, you can see we're getting excited if we can get the break of that wedge, right? Also look at the rounding bottom here potentially. Again, I wouldn't say a fan, but I don't use curvature on log scale. I use, straight lines because that's the power of the log scale in my book. But again, there is a point that this is rounding. You can see, and then we go higher. So it's like a pendulum, right? This one is just swinging all the way to here, and then it's going to go back again here, and that's what we're going to see there. So anything north of that trend line, give or take, let's say 600, then wheat is definitely something to look into. But for now, we still probably have a few months left of that wedge pattern before we see the result. But I'm expecting that to happen because that is our bias, given two very simple straight lines, trend lines. That's all you need basically to define your bias. And again, you can also argue, do we have some cup and handle? Yes, even though the handle is very low. Typically, you only want it to go down. I think it's roughly 40%, right? Roughly 40 or like 50%. Nothing lower than that. But yeah, it is what it is. Different talk here. Cotton, good old cotton here. Also, you can see we have a wedge made for the past 15 years. We have 4 connections, and that's what you need in order to confirm any pattern basically. If you have a parallel, if you have a wedge, whatever, that's what you need to confirm it. Um, and you can see here, we have an internal stuff here. So again, look at the beauty here. So the thing is, if we touch somehow the lower here, we buy into that, or when this wedge here breaks to the upside. We have two on top here, so if we can tag and do that, beautiful, cotton is set free. And the first big resistance will be a tad below $1, which is 0.93. You can see the internals here. Look at how many times. Every time we get to that level, for some reason, it's getting bought or sold. So we are expecting to get sold here, and then the big target for us will be roughly up there. And then again, what is the most likely scenario when we get to here, if we do that, is a pushback. So you sell here and then you wait and you can buy again upon the break. So cotton is also setting up for a decent long-term entry. And now we just wait. It's boring, but we could wait for 4 months until we get it. Um, there is a splitter, by the way, in the middle here. You can see that. That one there is one, if you're aggressive, you take that. So this is iron ore. Yes, it's not soft. I know it's hard as ever. But there are, again, this is China. So this is 8 years, almost 10 years worth of price action. Let's do the Heikin-Ashi because then we can see it more clearly. So again, not a textbook anything, but definitely still framed quite nicely in my view. This is 8 years. You can see we have a lot of support here. We have three here, right? We have three. So if that breaks to the downside, we are breaking on the fourth. And that is China and iron prices. Is that a promising thing with regarding to what's it called, the economy? No, it's not. So that is the most likely outlook here that we are going to break down and actually see very, a lot cheaper iron prices coming in. And the first break should take us to the lows here in 2020, by the way, if we get the break. So we could see a 20% spill quite quickly in the iron ore in China. The other hand, again, this is always if, then that. So if we break here, we expect roughly that. However, if we can negate that, maybe false breakdown, but if we can negate the blue and start to break here, then all of a sudden, hey, we're bullish. It's very binary sometimes. So a break of that, aye, bearish. A break above here, okay, fair enough. Then we have opportunities to go long. So that is iron ore in China, even though it's not, soft, but we don't cover this anywhere else, I think. So rhodium here will be the, no, we have one more. Again, just to pinpoint, rhodium looks very exciting here. We called the long here at roughly 500, and that is still valid. You can see we broke out of the 3-year downtrend, breaking out, flagging now, two back tests of that. It looks really strong. Again, probability-wise, a breakout into a flag, always good. Always good. So yeah, my target is still 700. When if that breaks, I mean, all of a sudden you're targeting, roughly 1,000. So rhodium, even though it's a little slow here to start with, is still looking really, really good. Remember, platinum looks fantastic. I mean, platinum, yes, we have pulled back 5% this week. It doesn't matter. We have had the 4-year breakout. So until we see some insanely high technical damage, then we are very bullish on platinum. It's one of the best looking commodities out there, really. Platinum, oh boy, it looks stunningly good. Good here. Here we have lithium. Again, not too much to draw really, because you're basically having such a huge collapse. The only thing we can draw is bear flags, right? So for now, let's see what happens. But lithium here, at some point, yes, will be tremendously a good investment. Talking about the LIT, right? The LIT ticker. That one is again, we're having a bit of a wait. We might have a few months still, but then we get a good entry on LIT. So yeah, that one there. And then cattle. Again, I haven't been investing into cattle. I'm just following it um, uh, for the fun of it, basically. And yeah, look at that. We're hitting the upper trend line here. So if you're into cattle here, I would sell everything. Yes, I would. I would sell everything. And the only way to get in here short term, again, if you sell, is if you break the red one to the upside. Then you can go long again because we're going to see a surge, but that should be sold into. My study or my views is that every time we break like an upsloping trend line like this, or if you have let's say you have a rising wedge, if you break that to the upside, that is typically the last moonshot, and then you should sell into that because you're going to come down more often than keep, consolidating and then go higher. You rarely consolidate out of a wedge pattern if you go to the upside. You rarely do that, in my view. You often do this, then you go all the way up, and then you collapse, then you bear flag, and then you wherever. So cattle here is a big sell, right? But also look how basically we are up 300% from the lows since we tagged it here in 2020. We tagged their perfect symmetry as well. There has been opportunities to get in. Again, the big one was down here in 2021. That's the big one. Again, very clean breakage of excuse me, of trend line. Any stock, anything, doesn't matter. That is a good one. That's a really, really one line breakout chart. Cool. You're along. And yeah, and you had a little smaller time frame you can see here as well. Uh, but yeah, for now, cattle, even though the trend is strong, I'm expecting a longer pause here before we do anything. Again, unless we can clear 220, then different game. I don't have much more other than the fact that we are waiting for the big breakouts in basically all the softs, which should happen here in 2025. The big ones, of course, on sugar might not happen in 2025, but we could get the bull flag breakout in 2025 internally. So yeah, remember if we get the resumption here in wheat, in sugar, and the continuation in coffee and all that, that is inflation, guys. Again, have you noticed how expensive already coffee has gone? Yep, it's going to be way more expensive, by the way. It's going to be way more expensive 5 years down the road. So have a good day, guys. And by the way, I want to do this for again. Just want to check before we go. You can see, again, this was also a trade. This is for you, Helle. This is Java here. We looked at that internal squeeze here, and we broke a 3.66, and that's the long, and that's the target, by the way. This is coffee. So all coffee stocks, uh, however they are exposed to coffee, should do really well. And yeah, JVA is still a prime example of tight risk, 8-to-1 risk reward, almost 9. Beautiful. Lovely. So that's it, guys. Have an amazing day. Wow, look at that one. That again, that was the reason why we went heavy long on on the uh, on the coffee, by the way. That breakage there. So anyways, I will not postpone this anymore. Have a great day, guys. Cheers. Bye.